Tesla is cutting prices again for some of their models. Some analysts say this is a negative. Well, I think Elon is smarter than that, and they're not going to sacrifice too much profit margins to increase sales. Now, I think advertising is the key to solving both of these problems, and I'll touch on that here in this video. I think it's very much not priced into Tesla stock. Speaking of Tesla stock, Tesla is up today about 2%. The stock is over its 200-day moving average. It's at $207 per share. As I indicated in previous videos, that break of the 200-day moving average and to hold that as support likely leads you into that $250 to $300 range. On top of that, the option activity today looks very bullish, and you're getting data that came out today from the labor market and the ADP employment change, which is quite negative. Let's get into all of this information. Hit the like button and subscribe to the channel if you have not done so already. Just a friendly reminder, and keep in mind I am not a financial advisor. So, first things first, let's dive into what happened today with the economic data. So, private payrolls rose 278,000 in May, well ahead of expectations. The estimate was for 180,000 job ads. You're 100,000 higher than that. So it looks like the Fed has more work to do. Now, the ADP report noted that the distribution of job gains was fragmented as increases were concentrated in just a few industries. So some industries did well, some industries did not do well. Construction added 64,000 jobs. Leisure and hospitality added 208,000 positions. Natural resources and mining saw a gain of 94,000 positions. Manufacturing saw a drop of 48,000. Financial activities lost 35,000. And education and health services was off by 29,000. Transportation and utilities increased 32,000. And other service categories increased 12,000. So some certain sectors here, manufacturing being one of them, and financial services, don't look as good as this report would make it out to seem. The leisure and hospitality sector continues to be the sector of problem for the Fed and their fight on inflation, or really just fight to get the labor market back into an equilibrium. So that's a big part of what is happening here on the day today. You also did get PMIs that came in, and the PMI manufacturing index came in at 46.9. You were expecting 47, so basically right on expectations. Not too much to see there. Initial jobless claims came in at 232,000. The consensus was 235,000. Little bit weaker, but not weak enough to give you really any kind of move. It was along with the expectations. Now, let's turn to Tesla. And let's say this right off the bat. The debt ceiling is no longer a concern. So the economic data is going to be of the utmost importance. I think individual stocks can start to move a little different right now because there was this kind of fear that maybe the United States would default for the first time in history. But again, everyone knew that we weren't going to. But that anxiety there really didn't let the markets react to any economic data coming out, basically anything. All people were focused on was the debt ceiling. Now that that is gone, you're going to be able to see a little bit bigger moves here in individual stocks as well as the broad markets. So that's a part of today as well, a part of this market. But if we take a look at Tesla individually, Tesla raised US EV prices, but there are deals online. So it's interesting what they're doing. Reuters reported on Wednesday, and this article is from today, that Tesla was offering discounts on existing inventory, viewing Viewing existing inventory on Tesla's website shows a discount of about $3,000 on a performance version of the Model 3. A rear-wheel drive Model 3 is marked down $2,000, and Model Y discounts appear to be closer to $500. CEO Elon Musk said in October that demand is strong and Tesla expects to sell every car that we can make for as far in the future as we can see. And that was before the price cuts started to accelerate in 2023. All in all, price cuts on some models are about 20% so far in the first quarter around the globe. Now, Tesla appears to have roughly 2,000 EVs in inventory. That's roughly 1 or 2 days of US sales. That's low compared with the traditional auto industry, which typically has 1 or 2 months of inventory at dealerships. And this is one thing that Tesla goes on to point out, that they can afford to cut prices and raise prices whenever they want to, essentially, because they get real-time data on how people are buying their vehicles. If they see a slow week, they can acknowledge that right away, whereas a Ford or GM, they sell their vehicles through dealerships. It takes a while to get that data. It's not so much in real time. So that's a reason why Tesla is raising US EV prices, but offering deals online. Now, advertising. I think this is something that really nobody fully understands yet, on Wall Street at least. Advertising is a game changer for Tesla, because Tesla's never advertised before. And the general population doesn't even consider a Tesla when they are thinking about getting a new vehicle, whether it's a car or anything else. It's just not even on the radar. At least where I live here in Michigan, it's not something people think about. It's not an option to them because they don't know. They're blissfully ignorant to Tesla's capabilities and the facts with a Tesla. But if they knew some of the things that you and I know, then they probably would be inclined to buy a Tesla. And I think this is much the same globally. I think people know what Tesla is, but they don't know about Teslas because they've never seen a commercial. They've never seen an advertisement. They've never seen a promotion of any kind. It's literally all word of mouth. So, considering that, when Tesla does actually start to advertise, I think that is dramatically going to increase sales and really turn a demand problem into a production problem. That's why I really don't care what I'm reading here, cutting prices or raising. It doesn't matter to me. I think once they advertise, you're going to see a production problem, essentially. They're not going to be able to make these vehicles fast enough once the general population learns about Teslas. That's ultimately it. The education is simply not there. And to think Tesla did all they did with no advertising is absolutely insane. And I think that one sentence is enough to make most people bullish. Tesla, look at what they've done without a single dollar of advertising. Elon Musk is pretty good at advertising, but it's not like Elon gets put in the headlines for praising Teslas. He gets put in the headlines for buying Twitter or other things. It's not like they're putting him in the headlines for being one of the fastest vehicles, 0 to 60, being one of the safest vehicles out on the roads, to have some of the best fuel mileage that you can really buy, right? 20-minute charge, give you 100, 150 miles. That's not going in the news. So ultimately, when that does, I think that is going to be a very exciting moment. Now, on to what we have tomorrow with the economic data, because tomorrow is a Friday, and it's going to be a big Friday. So 8:30 in the morning, you're going to get the unemployment rate for May. You're expecting 3.5%. The current unemployment rate is 3.4%. So you are expecting the unemployment rate to tick up a little bit. If this does go to, 3.5, 3.6%, I don't think we have an issue there. If it jumps to like 4%, if it's much higher than expectations, then you have a problem. Then markets are not going to react favorably to that, because then they're going to acknowledge all of the recessionary data that we've gotten and say, hey, now the unemployment rate's starting to jump. We're really seeing a recession now. And then the recession fears are going to come back full steam ahead. Now, if the unemployment rate comes in line with expectations, that's really what you want to see. If the unemployment rate falls, then that's going to mean the Fed has more work to do. So it's really a fine line here between being too high or being too low. The non-farm payrolls, 8:30 in the morning as well. That data will be coming out. You're expecting 180,000 net job ads. Last month's reading was 253,000. If this comes in again hotter than 250,000, you got a problem. If it comes in lower than 100,000, you're also going to have a problem for the same reasons. Fears of a recession or that the Fed will have to do more. Currently, markets are pricing in a 71.5% chance of a pause June 14th. This data tomorrow will be important because it will move around the probability of a pause or a rate hike in June. And then really the next piece of big data that's going to move the Fed futures, the expectations for Fed policy, is going to be June 13th, the day before the Fed meeting, when you're going to get the CPI report that does come out. So tomorrow, needless to say, is going to be a very big day. As far as the option activity here today with Tesla, you have seen 219 interesting orders. Now, this is called interesting flow sentiment. It basically tracks large orders. It tracks the aggressiveness, I guess if you want to call it, of orders, how quickly firms wanted to get into these positions, and did they buy these right on the ask? Did they go in just guns a-blazing, willing to pay whatever someone was willing to sell them at? It tracks those kind of orders. Now, you have seen these 219 orders worth $58.51 million, positive order value of 77% here today. So positive, very positive. 77% positive order value is a lot higher than what you typically see on any other kind of stocks. At the same time, I do want to point this out. I don't really think it's a huge thing we should think about necessarily, but there is about $21 billion worth of short positions on Tesla currently. 3 months ago, there was $16 billion of short positions on Tesla. So you have seen these short, the dollar amount that is sold short in Tesla increase quite a bit over the last 3 months, and that can help lead to buying pressure on an upside move. Something to acknowledge, right? It's not necessarily about the short interest percentage, but a lot of it does have to do with just the dollar amount that is currently sold short in a stock, and Tesla is heavily shorted on a dollar basis. Now, if we take a look at Tesla on a technical basis, well, you're above that 200-day moving average. And what do we say? What do we talk about? You found support every day for the close the prior 2 days. So 3 days in a row now. This is a pattern of an uptrend. This is healthy. You break above the 200-day moving average, you go up, you come down, you retest that 200-day moving average, hold that as support, and then you're going to get that continued rally. Maybe it's starting right now. Tesla stock is up 1.70%, or maybe you consolidate for a few, and then you make that push higher, around $250, $300 over the next couple of months. Now, I'll tell you, once Wall Street realizes advertising is going to add so much business to Tesla that you're literally going to have a production problem, well, as long as Wall Street don't see that production problem as a bad thing, in which I don't really expect them to, I think Tesla's going to be a $300, $350 stock. Again, could go higher than that. We've seen other companies that are worse companies break out from their all-time highs. So that's kind of what I'm looking at here right now. I do think there is a huge potential with some of the longer dated options, but just buying and holding Tesla stock does tend to be really the way to go. If we look at the RSI, technically overbought. So consolidation, as I indicated in the prior video, would be healthy to get the RSI back in a normal alignment. The MACD is in bullish territory, guys. So that is going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.